Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Nvidia results, they are out. They've been out now for, about 15 minutes or so. Our headline story written by Bloomberg's Ian King, who we talked to at 2 o'clock ahead of this. Nvidia, which is really the chip maker at the heart of the artificial intelligence boom, gave a revenue forecast that fell short of some of the most optimistic estimates, stoking concerns that its explosive growth is waning. Third quarter revenue will be about $32.5 billion. The company just put that out. Analysts had predicted $31.9 billion on average, so that was a beat, but some estimates range as high as $37.9 billion, so almost $38 billion. Nvidia shares now, Tim, just down about 0.9%. So
yeah, they were down.
Quite a bounce back.
They were down more than 8%, just in a few minutes after. As Carol mentioned, it's been about 21 minutes since we did get those numbers. That's enough time, I think, for Ivan Feinseth, Chief Investment Officer at Tigress Financial Partners, to digest the numbers ahead of the call. He's got a buy rating on the company's stock, a price target of $170. Right now, shares trade in the after hours at $123. Ivan, good to have you with us. This earnings report, impressive, disappointing? Does it change your view at all on the company?
I think it's as expected. It's positive. They beat and they guided higher. I mean, expectations have been rising. The stock is up a lot, but this is part of a very long-term play on AI adoption, and Nvidia is the key component of it. There are estimates of over $250 billion in capital investment being spent by all of the major tech companies, and the majority of that going to Nvidia, which is powering these data centers that run these AI large language learning models. And that will continue. And I credit Tom Siebert was saying from Siebel Systems that every company is going to be an AI company. All types of companies are going to use AI in different ways to optimize supply chains, to target customers for predictive analysis, for marketing, for customer interaction and engagement. And so everybody is going to be investing in AI at some level. And especially the more complex large language models are going to run on the most advanced NVIDIA GPUs, which right now is the Hopper, and then soon to be the Blackwell, and then next year will be the Rubin.
Ivan, shares of Supermicro Computer today fell 19%. The company said it's going to delay its annual financial disclosures. It said that it needs additional time to complete its assessment of the design and operating effectiveness of its internal controls over financial reporting. I look at the supply chain function on the Bloomberg terminal. I see that Supermicro is the third largest customer of Nvidia, accounting for more revenue than Alphabet and more revenue than Amazon and more revenue than Dell. Does that concern you?
Not really. They are a big consumer of Nvidia processors. In fact, not too long ago, the CEO of Supermicro was being interviewed. He's a good friend of Nvidia's CEO, Jensen Huang, and he keeps calling Jensen, asking him for more and more processors. And Jensen replied, I can't take all this pressure, but the demand exceeds the supply. And if for some reason that Supermicro couldn't fulfill the order, then it would go to Meta, which is also trying to get as much as they can from Nvidia, and then all of the others. So this demand well exceeds supply. So if there was for some reason a customer that couldn't take what they committed to, Nvidia would not have a hard time replacing that demand with another customer. So from that standpoint, the Supermicro issue right now is concerning, but I think they will work its way through. But as it affects Nvidia's demand, I'm not concerned.
Okay.
Hey, what I do wonder in the build out, this, large language models, generative AI, advanced AI, the build out, which requires all these chips from Nvidia and other equipment, if you will, from some other companies. Having said that, is the build out just going to be this straight line up, or should we assume that there will be bubble moments within the build out? And so companies will see spurts of growth and spurts of spending like we've seen over the last year and a half or almost 2 years here. And then we'll see maybe pauses. even though the long-term growth story may be there and the long-term impact on how we do everything may still be there?
Well, I think the demand will be strong and it'll be driven by fulfillment. Remember that a lot of the investment in AI from these companies is what is driving their competitive advantage. So companies cannot afford to lose ground on this front to other companies. So I think that you will not see the ebb and flowing of capital investment. I think this is one area that will stay steady.
So Ivan,
especially if you budget out long term.
So we've seen enough of a payoff in these AI investments that it makes sense that we're going to continue seeing the investments.
Well, not the payoff right now. It is generating, positive results for things, but it has to still go a long way. I mean, to use as an example, customer service engagement, a lot of what you're seeing in voice response system and chat windows on websites is all AI driven. And some people complain about the interaction that will improve over time. But as far as pricing, the dynamic pricing on websites, humans from a lot of these dynamic pricing in the travel industry have not been making pricing decisions for 2 years, and that will continue to be optimized by the use of AI. So we see it on platforms like Instagram that target ads based on what you seem to be interested in, and it all keep improving. So there is some payback being shown, but we are still in the infancy of this. And eventually we will have much better user engagement, much better reaction. And part of this whole large language learning process is the learning process that will continue to improve.
What's the biggest threat to Nvidia?
Well, some people feel that potential from competition from AMD, from many of these companies like Google, Facebook, designing their own processors. And I think it will delineate that you're going to want, for the most complex and the most need for speed, you're going to want Nvidia. And then, subroutines and tertiary routines can be run on other less slower processors. But the fear is that other chip companies will eventually have things that can compete on some level. However, as I said, by the time they catch up to the processing power of the Hopper, Nvidia has the Blackwell. By the time they would catch up to the Blackwell, Nvidia has the Rubin coming out next year.
Oh, interesting.
Yeah, so these are the things to come, and it'll be interesting to see what they have to say about Blackwell in terms of fourth quarter, if they can put some more specificity, right?
And the one thing I say, that if your business is dependent on the fault tolerance, if you will, of the AI processing capability, you're not going to cheapen out and go for a lesser processor. You're going to want to go, especially with your most demanding routines and inferences, you're going to want to go with NVIDIA.
Is there any company that's even close to doing what NVIDIA does at this point, or not yet?
No, because the other side of the coin is NVIDIA also has the software that goes along with this. So it's the software which is as important as the hardware, as the processor itself.
Who are the smaller customers that Jensen Huang needs to go and find?
Other companies that would use AI in some way, and the majority of companies that are using this, they are using it on a cloud-hosted or hyperscaler platform, like using AWS or Microsoft Azure or Google Cloud. So, which also, I think AI and the access to it kind of is democratizing the process. This is not just for the biggest companies, but because you can buy it in such small bite sizes, as far as minutes and time on a rented server, or even the ability to rent servers, you can buy NVIDIA's processing power on a subscription basis. So it doesn't require the massive investment in a data center. And for the processors and the software and everything else you need to build it out. So I think this is a tremendously democratizing process for businesses of all sizes. And it comes down to the creativity and the ability to apply it. So that's the real, I think, wave behind all this. that it will be so ubiquitously applied in so many different ways.
All right, so Ivan, last question. What's the headline on any research you might put out later tonight or tomorrow morning? And do you change anything? You've got a target price, price target rather, I should say, on Nvidia of 170 share. So what's the headline? Yeah, go ahead.
Maintain my buy. I say strong quarter. Business continue, and they also, by the way, announced another $50 billion share repurchase.
Oh yeah,
so
that
they
whole
are
thing.
generating
It's a lot of money.
Tremendous amounts of cash, and a company like Nvidia and some of the world's leading companies like Microsoft, Apple, Google, Meta. These are intellectual capital intensive and not financial capital intensive. So they tend to throw off a lot of cash, and they continue to return a tremendous amount of cash to shareholders through these ongoing stock buybacks.
All right. So with a buy rating and the stock down 4.5% in the aftermarket, you're like, yeah, now you can even buy it on sale a little bit, right?
Absolutely. I was kind of expecting the stock would be weak because unless they reported just something tremendous, the reaction would probably be to sell it. So you look at historically, any weakness in the stock has been a buying opportunity, and I would say that this is the case as well.
Interesting stuff. Hey, Ivan, thank you so much. Appreciate you spending so much time with us to break down and talk about NVIDIA. Ivan Feinseth, he is Senior Partner and Chief Investment Officer at Tigress Financial Partners.